Next, for more on today's market action, let's bring in Lee Munson, Chief Investment Officer at Portfolio Management, and Steve Auth. He's CIO of Global Equities at Federated Investors. Welcome to the program, gentlemen. Let's start out with you, Steve, because you say that we're in a bottoming process right now. So you're saying that this is what bottoming looks like?
This, unfortunately, is what it looks like. It looks just miserable. The news is terrible. You're down here retesting a very high volume lows that we had back in the fall. We think we've been in a bottoming process. We've been telling people to average in. Our models are actually telling us to be even more modestly overweight equities here. Very difficult to do in this environment, but valuations are very cheap. Sentiment is terrible. We think we're probably approaching a bottom right in through here.
Very difficult to do. A lot of people have tried doing it, gotten burned in doing so. Lee, in addition to the problems that are out there, there's also just a lot of missing clarity. We don't know what a lot of what the government will be doing in the coming months looks like. How do you play a market when you don't know what Washington's next step will be?
Well, first of all, you have to really focus on the defensive names. We have started over the last few weeks upping our allocation to defensive names like Altria, Johnson & Johnson, Unilever. We like Unilever because they can pass on those food prices to their customers, and they also don't have the burden of a strengthening dollar. I think outside of those defensive names, we still have a problem with big pharmaceuticals, even though we do have some Johnson & Johnson. We still think that the pipeline and is uncertain across the big pharma industry. But we do think that you can play protectionism here a little bit, especially on some large cap names like Nucor. If there is going to be stimulus, that raw steel is not going to be purchased from China. And we also like a small cap name like Horizon Lines. If you're going to have stimulus reach the U.S. territories, a place like Horizon Lines, people don't understand. There's a law called the Jones Act. If you got to ship something from a U.S. port to a U.S. port, that's got to be a U.S. ship with a U.S. crew, with a U.S. company. And so we would rather go a little bit to the people actually delivering those goods and not making bets on what infrastructure companies are going to benefit from stimulus that just simply may not come about.
Steve, you have an interesting take as well. You're looking at small caps over some of the international names. Tell us about that.
We're trying to stay away from international right now, Rebecca. The U.S. economy is moving a little faster through this than the international economy. Is probably a quicker policy response. We think the dollar is likely to strengthen. We'd be a little nervously about the staples names. We think what defines defensive here is more the quality of a balance sheet rather than the sector you're in. A lot of those staples names held up relatively well up to now. Towards the end of a bear market, typically those defensive sectors get taken out. There's a lot of pricing pressure to come there, we think. So we'd rather stick more in companies that are more heavily oriented to the U.S. economy with less international exposure.
Steve, how about some of the small cap financial names? Do you even look at those names at this point in time?
We're not huge fans, Rebecca, of the financial space. I think, people keep saying this market can't rally without the financials. That has been the rule of thumb for the last 20 years. The financials are now down to roughly 10% of the S&P 500. They're probably going to get bailed out. I think they survive. But the question is how much the existing equity shareholders make out of it. And clearly the government is going to take a pound of flesh out of them before this is over.
Lee, we definitely saw today tech leading at least the only rally really in the overall markets ending up the day. Do you look at tech at this point in time, or do you sell, as you say, overall into the rallies?
We think some of those
I would say overall.
I'm sorry.
Go ahead, Lee.
No, I would say you really want to sell into the rally right now. I think any long position that you take right now, you have to look at selling into it. We don't really look at tech.
Steve, you disagree or you agree?
I don't completely agree. Some of the tech stocks have pretty decent balance sheets. And as I said earlier, a key to defensiveness here is to find companies with good balance sheets that can work their way through this valley that we're in. And it's a pretty deep valley. Some would call it a chasm. But the Macy's announcement today is another example here where companies with less strength on the balance sheet have to take very, very drastic actions. Some of the tech stocks, traditionally have had good balance sheets. We think some of them can survive through here.
It's a really good point. Thanks so much, Steve and Lee, for being with us today. All right, here's some of the other stories we're following on the Closing Bell.